Today, boys, it is a glorious post-bank holiday trading day. These days are meant to be glorious. These days are meant to just have a 90% chance of hitting full take profit. No joke, back test it yourself. Majority of the time, a post-bank holiday is absolutely astonishing. Today, I ended up taking 3 trades. I took 1 break even and 2 losses. I did the majority of stuff well that I could, so let's get into the day. So here are the trades. The longest one I held today was for 19 minutes. So I ended up holding a long position from here, take profit at Asia high, stop break even, unfortunately. I ended up taking another trade that was pretty avoidable, if I'm honest. It was a 15-minute gap below. There was a 15-minute gap below, but I was willing to take the trade. I mean, it aligned with my rules. We had an S&T holding with 15-minute low, and we had no reason to actually take it out, but hey-ho, I mean, we took that loss. That was a minor $234 loss. And then if we come over to the last loss that I took, managed risk extremely well. Well, I'm going to say it again. So every single trade I take, I risk 0.5% of my account. So 0.5% of my account is $250. So I have a $250 SL on each of the trades that I take. Now, I aim for 1 to 2s minimum. If I can scrape a 1 to 5, happy days. I'm not going to up the risk. I'm not going to down the risk. It just all stays the same. So if I've already taken a loss on the day and I'm down 0.5% on the accounts, I will halve my risk again. I entered this trade risking $160 and I exited for minus 120. So overall, did I stick to my plan? 100%. I had a bullish bias going into the day. I managed risk extremely well, and yeah, it's unfortunate. It's an unfortunate end to the day, considering it is a post-bank holiday with an absolutely humongous opening gap range. But I mean, this is the way you're gonna get treated. Like, I made some bad decisions today, some normal decisions. So let's get into the day as a whole. So here it is, minus $354 across each of these accounts. So that totals out to $1,720. Okay, so let's get into my bias on the day. So stepping into the day, I already know that it's a post-bank holiday. That means that the opening gap range that is going to be opened is going to be completely ridiculous. And as we can see today, everything aligned for price to go to the upside. We had a S&T with this weekly low, YM didn't take it. We had London low resting above, Asia low resting above, new week opening gap resting above, and we had obviously the opening gap range resting. So naturally, every single draw on liquidity points to the upside. Now, if I'm bullish on the day and everything aligns to go to the upside, I'm just going to be looking for buys. So I'm going to wait for some kind of displacement or confirmation that price is internally going to the stars, and then I'm going to look for some manipulation in the market, and that is the exact logic I go into most trades with and how I went into today with. So up on market open, we already had an S&T holding with YM taking this low out and YM also taking these lows out. So you can count this as an S&T if you want. You don't need to, so let's actually not count that for today. I'm then going to draw out equilibrium of the range, because if in this price leg we haven't retraced the equilibrium of the range, then majority of the time we will have some kind of pullback to it. So if we draw out equilibrium of the range, we can see here that price tapped into 50% of the range or equilibrium and rejected to the upside. So from here, I'm just expecting some kind of easy continuation. So I'm going to wait for the optimal entry and the optimal time where price favors my direction, plus gives me some kind of good risk to reward. So price opens up, it shoots up, leaves London high resting, goes down, retraces into this 1 minute for value gap, and from here it just displaces to the upside again. Could I have traded there? 100%. Did I want to? No. And that's why I faded it. So as soon as price took out this London high, we've still got the opening gap range and Asia high resting, as well as the other external draws on liquidity being new week opening gap. So from here, I'm just waiting for some kind of retracement, because am I going to get in at the top of the range right here? Absolutely not, because it will give me a bad risk to reward. Plus, we have had no manipulation, so I'm going to play the waiting game. I end up playing the waiting game. A 5-minute for value gap opens up right here, and honestly, at this point in the charts, I was like, cool. I want to enter in long. I want to enter in long because if we draw out the fib from the New York AM's session so far, we have retraced into 0.62 of the range and rejected to the upside. Now, critical thinking comes into trading as well. Like, critical thinking comes into trading in the sense that I might want to enter in here because we can see that price has got draws on liquidity remaining above, and it has already retraced into 50% of the range and rejected. But critical thinking comes in because at this point in the range, there's going to be a 5-minute for value gap open up. So I'm not trying to waste people's time listening. I'm not trying to flip and get my watch time down because people exit the video when I'm explaining something like this. But critical thinking is a big factor in your trading. If you understand that there's going to be a 5-minute for value gap opening up below in this scenario, you're obviously going to wait for that. So price ends up sweeping into this 5-minute for value gap. Instantly, we can just expect that everyone who enters the chart here, or maybe on open, or maybe up here, they're all going to move their stop losses to break even after this London high swept. What does that mean? Price is going to sweep them out as soon as it takes out this 5-minute for value gap. That's cool. We've had our stop out. We've had the people who have broken even their trades from here, stopped out. At this point, I'm like, cool. I've had my SMTs in place. I've had my confident drawn liquidity, my breaking structure being the 5-minute breaking structure, as we can see here. We had a closure above all of these bodies. And then finally, we have got our internal manipulation with people getting stopped out there. So at this point, I literally just launch into the trade. Obviously, I'm going to be managing risk. So I put my stop loss at this New York AM low. Take profit is at Asia high. Now, considering how price would react to this range, I was going to put one partial take profit at the opening gap range high and the full TP being Asia high, but I probably would have just held it to this point if I had have seen all of this shenanigans. So anyway, price, still being in the trade, we can see price break the 1-minute structure to the upside. I do not move my stop loss at all at this point because we can still expect some kind of pullback to stop people out. If I had have gone break even after this high was swept, you can see what would have happened. I would have been stopped out straight away. So come on, boys, you need to use that brain of yours and use that market experience. So as soon as price broke above here, I was like, cool, I'm going to trail my stop. I'm not going to trail it to break even because there's still a big chance that price has a retracement into it because we've got all of this stat liquidity to the left of us. And we've also been pretty choppy making our way out of this range. So yeah, my entry actually ended up being like here, I think. So at this point in the range, after this high was swept, I moved my stop loss to this new recent low. Because price had no reason to come back down into it. We'd already rejected the 5-minute for value gap. So here is where price ended up being an absolute spastic and just screwing everyone who was in longs. Price ended up holding this 1 minute for a minute, but then it came down to this spot. Now that is my break-even spot. Why did I not move my stop loss to break even? Because I understood what could happen. I understood exactly what could happen, and that is what happened. Price then ended up rejecting up, closing above this 1 minute down close candle. That is when I move my stop loss to break even. If we get broke even then, I don't care. I've done absolutely everything I can. I've managed risk. I've opened the correct lot size. I haven't over risked. I have managed my stops extremely well, as best as possible. And unfortunately, that trade got stopped out. So at this point, I was still holding a bullish bias. we had a 15-minute for value gap resting below. And unfortunately, this was the very avoidable loss that I took. So as soon as price rejected this low, I got some impulsive thought that price would continue to the upside. That was pure impulse. Now, was logic involved in this second trade? I would say so, yeah. I would say so. I put my exact risk that I should have been entering in with. My take profit was good. I mean, your take profit's always going to be good, but my risk was fine. I was just a bit too early. I was the manipulation for price to move higher. Then, unfortunately, that happened a second time. I mean, at this point, we had valid reason to go to the upside. We had already swept out this 15-minute internal low. We were holding an SMT with here. ES ended up sweeping out that low. From this point, I saw price have a lot of friction around this area. Ended up entering in long. Take profit 1 would have been 2 contracts off of the opening at range. Take profit 2 or full take profit would have been the Asia high. And yeah, sadly, I was the manipulation for price to move higher once again. So main takeaways today, thinking positively, I did almost a perfect job on my risk management. I managed risk accordingly. I didn't oversize once. I didn't get emotionally greedy at all. One thing that I could have improved on was being a bit more patient. I could have avoided this first loss, and that would have meant I still had the mental clarity to take another full-size loss. Because look, if you understand how to trade, and mainly you trade once a day, or like you take 1 trade a day, 2 max. Once you get onto that 3rd trade, you're kind of pushing the limits. You were kind of reliant on winning. But I mean, it is what it is, man. I stuck to my bias today. As you can see, the stupid bitch was right. as kind as I can say it, the stupid bitch was right. But yeah, it was an unfortunate day. But we're still going to be here tomorrow. So I'm turning 19 years old tomorrow, and am I looking forward to it? I mean, it's just another day for me. Still going to be on the charts. Still going to be suited and booted for the session. So yeah, today, unfortunately, I'm down $1,700, but as long as I stick to my rules, it will come back to me 2x extremely soon. So I appreciate everyone for watching, and I will see you tomorrow.